You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean only one thing. It is Friday. It is noon Central, 1 p.m. Eastern. Yet it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which so many of you have been binging throughout the week, usually multiple shows a day. Only one on Friday, but it's a good one. It's a doozy. So make sure you guys, if you like what you hear, keep those reviews coming on your platform of choice. And new folks can continue in these troubled times to discover our content. Keep hitting us up with those questions, too. We do love to hear from you guys. Just not usually on, the iTunes or the Google Podcast platform. Those usually take a while to make their way to us. If you have a question, hit us up via the more timely routes out there. Let's see who else we're hearing from on the old program today. First, let's go out to the MIAX hot seat, where I'm pleased to say we are joined once again by Mr. Tom JARCK, the volatility product specialist over there in MIAX land. Tom, welcome back to Volatility Views, sir.
Thank you, Mark. Thank you. Happy to be here. Appreciate the invite.
All right, and then also joined by, I do believe that noise in the background can mean only one thing. It is the greasiest of meatballs, Mr. Mark SEBASTIAN from OptionPit.com, by way of Carmen Line Capital, by way of a little state known as Texas. Mr. Meatball, welcome back to the program, sir.
Hey, it's great to be here. I'm enjoying this beautiful weather. I'm out in shorts and a t-shirt on Angels Night.
It wasn't snowing for you this week down in Texas like it was in Chicago?
We had zero snow. It did get cold. It got into the 50s. So,
better bundle up. You need a second sweater if it hits the 50s.
No, it was hilarious. People down here are like in winter coats, and I'm walking around in a sweatshirt. And they're like, what's wrong with you?
You'll get there. Your blood will thin sooner rather than later. You'll become a thin-blooded Southerner like all the rest. And, he's not quite a Southerner. I mean, he's definitely in the realm of Southerner. I don't know if his blood has thinned quite yet. Maybe it's all the boating he does keeps him active. I'm also pleased to say we're joined today in our guest seat by Mr. Brian Overby, the senior options analyst, a.k.a. the options guy over there at Ally Invest. Mr. Overby, welcome back to the program to you as well. And has your blood thinned down there in your southern adjacent realm, sir?
No, they'd still do some things here that kind of make me scratch my head a little bit in that we did have a little bit of the hurricane came running through here and brought a little bit of rain. But in Charlotte, North Carolina, where I live very close to, we actually just had wind. And because of 40-mile-an-hour wind gusts, we had our schools canceled. So being from the Midwest, basically that would mean that you would never go to school up there if you implied that type of theory to it. So, yeah, they canceled the schools in Charlotte because of wind. No rain, just wind.
That's impressive. We're down here on the river on Chicago for the Options Insider Studios. And I can't remember a day when it wasn't gusting at around 30 and 40 miles just on a given day down here by the river. They do call it the Windy City, after all, and they call it Volatility Views. So let's get rolling with the old Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Time for the Volatility Review, the portion of the show where we look back on the week that was and indeed still is. From a volatility, trading, and trending and analysis and unusual activity and all sorts of perspective. The cash indices, the futures, the options, all that good stuff. The ETPs that I know you guys love or love to hate, and a whole bunch more. Coming into showtime here at the end of the week, it seemed like yesterday maybe the market was putting some of the red on the screen that we saw earlier in the week behind it, starting to fight back into rally mode. Today, nope, not so much. A lot of red back on the screen. Pretty much giving back all of yesterday and then some out there. S&P, once again, the Goldilocks off right around 1.7%. The Dow off about 1.33%. And once again, the NASDAQ leading the charge, this time in the wrong direction, off over 2.5%, about 2.6%. So a pretty blood red day out there after we had a slew of earnings in the tech space last night. A lot of the big names you guys like to watch were reporting, and apparently en masse, collectively, the news is bearing down on the market today. Coming into showtime here, we see our old friend Spikes, shall we say, well north of where it was this time last week, at about a 39 coming into showtime. That puts it up a little over 10 handles, about 10 and a quarter handles from this time last week, which I do believe, I'll have to check, but I do believe is outside all of our realm of prognostication. I don't think anyone had a 30-plus handle, let alone a 40 handle or close to it on our crystal ball, but I'll check to confirm. VIX cash was at about a 38.5 coming into showtime, puts it up about 10 and a quarter, pretty much exactly as well. So Spikes and VIX cash both moving in lockstep over the course of the week. And our old friend VVIX, aka the volatility of volatility, at least while we're waiting for the Viking/V Spikes to get cooking over there, that's at about a 150, listeners. We always talk about, the 120 being, hey, that's pretty elevated, that's pretty frothy. We blew the hell through that. We're up 30 handles from this time last week. Got about a 150 coming into showtime. So that should tell you, if nothing else does, that things are frothy, things are turbulent out there right now. So a lot to unpack. Let's start with our guest. He hasn't been on in a little while. I think it's been since July that you've been on the Volatility Views program, Brian, so it's been a while. What's been lighting up your tape and the tape of all your legions of options traders over there at Ally Invest this week, sir?
Well, obviously, where our volume really comes from on the retail side, I guess I don't know if that's obvious, but whenever we see a big day in earnings, and it seems like Amazon likes to lead the way. They've always announced on a Thursday before a Friday expiration. They've always chosen to do that. But then it looks like everybody else is joining in. We got Apple, Facebook, all of these FANG stocks joining in, and that's added so much volatility. Overall, it's kind of odd because almost all of them are down 5% on the day. And actually, on our show yesterday on the Options Playbook Radio, we actually talked about a volatility trade in Apple and Facebook. We kind of did a pairs trade yesterday, if you will. And so we're seeing that's where our volume is coming in at. So we have a lot of volume overall in those underlying stocks. They represent a big percentage of our option trading holdings. And today, obviously, with the activity, we're seeing we're going to have a big trading day overall here over at Ally Invest.
Would you say, Brian, that earnings is kind of the key driver for a lot of your folks out there? They love playing during these otherwise turbulent times, sir?
Well, and I don't think there's any in between when it comes to the clients, because I get a lot of questions about it. I usually try to address in particular when those stocks are announcing earnings. I either do it via the podcast or I do it via sending an email out to our clients, because just people want to know exactly what's going on, what the expected move is after earnings in these underlying stocks. And so I usually try to address those topics, and I do get a lot of feedback on it. And so either the people overall, and I think it's right down the middle. Either half of the people want to trade after earnings and half of them just want to avoid it. In other words, they just want to move on and get this earnings event over, get rid of that volatility, and I'm just going to totally avoid options in general. I personally like it because, like, you look at a stock like Amazon, you have all this juice that comes in from the volatility, and then you throw in the fact that you have an expensive underlying, which adds premium, and all that premium has to go away in one day. So it just makes it real interesting to do trades on that one day after they announce earnings, now that we have weekly option contracts. So, which I guess nowadays they're not quite as new as they used to be, but it does create a very interesting dynamic when all the FANG stocks that are basically driving the market higher in general since the pandemic all decide to announce earnings on the same day overall. And hence we see the VIX, why not? Let's throw it in there. We have the spikes and the VIX way up. The VIX over 39, and we also think with the spikes is actually at 39 too. So you throw in that much volatility in the marketplace, and if you're a real trader, I don't know how you don't trade on this day.
Yeah, it's one of those days it's kind of hard to ignore. It's like the black hole of the option space. There's so many names reporting. Even if you like to stay away from earnings, and it's hard to argue with that approach either, it's still a day you have to pay attention to, because obviously it has some market moving impact and potential when so many, pretty much almost all of the FANGs are reporting in a single day. It's kind of hard to ignore that, especially given their size in the major indices out there and how much market cap and market share they dominate out there. All right, Tom, it's been obviously a surprisingly busy week, perhaps, although we can't really use a surprising word anymore because it's 2020 and every week is crazy going forward. But it's been an interesting week nonetheless out there in the volatility front. What's been lighting up your tape in volatility land this past week, Tom?
I got a few things for you. Well, first I'll say that storm is hitting us pretty good here on the East Coast, where we have. I live in a town that's between two rivers and the ocean, and it's a lot of low-level flooding going on from Zeta. But one of the things I want to say was your show last week. You had a guest on who I guess was on back in February, and I took that as a piece of data, and it sounded like he was somewhat of a contraindicator.
Yeah, he's a little scary when we have him on because the week after he's on, everything melts down.
Yeah, so I sold everything. I bought puts. I bought vol. No, I'm just kidding. But yeah, I thought that was pretty funny. But overall, just the markets are I think just really reacting to the COVID for the most part, as well as lack of stimulus, and then with the elections coming up, there's definitely a lot of uncertainty. I'm thankful we're finally getting to the election period because we've been talking about it for a year now. So it'll be nice to get through it whenever it ends. I don't know when the final determination will be of who our next president is. But so MIAX has been very busy. As you know, the launch of the Pearl Equities exchange, as well as the announcement about the MJEX, the Minneapolis Grain Exchange, that's been keeping them very busy. I will say you had a great interview with, I think it was last week, with the CEO, Tom Gallagher. It was a really, well done interview. I actually learned a lot from it, so it was good.
I'm glad I could help educate you about MIAX, sir. That's my job.
Yeah,
here.
No, it's good. So, I'm actually not working I've been in the office a couple times in the last couple of weeks, so it's, I've been able to actually see a few people, but not many. I think just vol-wise and market-wise, it's just all about, the elections now. And obviously we've rolled over a little bit on this COVID thing and, which who knows where this, when this ends up ending, which probably never will. So I'll let Mark jump in.
you mentioned that interview. That was a great chat we had with your CEO over there, Tom Gallagher. That was last week on the network. You can find that, of course, listeners, wherever you get our network content, or if you subscribe to the interview program, you can get that there as well. Fascinating stuff. Talked about not just spikes. Of course, that was a big part of the conversation, but also acquiring a variety of different exchanges around the world, including a futures exchange and MJEX, the Bermuda Stock Exchange, investments into crypto and digital assets. Didn't even have a chance to get to things like the diamond contract there. The MIAX is making moves in a variety of markets outside of just spikes, and we got into a lot of that on the show. So check it out. It's some interesting stuff. It's not just what you might expect from a conversation with an options exchange. It's a whole lot more cooking over there. And you mentioned the election is hard to fathom, but by the time we do the show again next week, we will know, or we hope we will know, who the president of the United States is. So that should be an interesting thing. This election bump, this election premium we've been talking about for the better part of 2020 will perhaps, if you look at the way the market's leaning, perhaps be in the rearview mirror. It's hard to really know for certain, but it is interesting stuff. By the way, if you want some insight in between now and next Friday, make sure to join us live Tuesday night. We're going to have our live election night special. I think all of my cohorts here on the show today will be joining us in some capacity throughout the night. It's going to be quite the cavalcade of stars during that. So join us. Starts around 6 p.m. Central and goes till whenever we feel the conversation has ended. And so join us. You can get it on the Mixler link and a bunch of other places. We'll make sure to put that out on all of our various social media platforms so you guys can see it and follow along there as well. All right, Mr. Meatball, I know you've been busy enjoying this summer weather down there in Texas, but if you've had time to watch a little bit of volatility, what has been lighting up your tape this week, sir?
Yeah, I think the interesting piece is that Apple, Amazon, Facebook, and Microsoft all laid a huge freaking egg on their earnings. None of them wanted to give guidance. Apple's earnings were they actually had a cash reduction, which people don't like. There was a lot there to unpack. Amazon didn't want to give guidance. Facebook had a decline in users. Twitter, after touches an all-time high and then immediately gets completely smoked. About the only bright point, which is kind of a surprise because Google's usually kind of the outcast of these earnings. But of course, why wouldn't this happen? Google has, knock your socks off earnings and is off to the races. So kind of a weird one. I made the joke on Twitter that nobody seems to get is that it doesn't feel like there's any follow through to the VIX or spikes here, because really we have such a suck of option premium out of the FANG names, which represent a huge portion of the market, that really down 60 points and with a 38 VIX, how much should VIX be up? And the answer is not very much. The way I see the market today, I would not be surprised if we get bought this afternoon and we actually have a red VIX. Heading into the election, I think VIX is probably overpriced. Spikes is probably overpriced. And, I'm looking to see, how the market reacts. For all the panicking that we're doing about the S&P 500, it's 3250. We're what? What is that? 4-5% off the high? Oh no. Woe is me. I think we'll be okay. So I've been kind of fascinated by what's been going on. I've also noticed that there's been a pretty decent uptick in option volume on VIX relative to where it was. But what's been unique, and this is something we pointed out on Wednesday when we had that giant down day, the ratio puts the calls was 3-1 in VIX. And I believe spikes was pretty similar. So think about that. In years past, or in any sell-off past, when we were down 100 and the VIX went from, and spikes went from, 28 to 40, the amount of call buying that you would see, the amount of hedge racing that you would see would push, 1 million, 2 million calls being bought. And instead, we didn't see any of the call buyers come in, but we did see all the faders still step in. So there are a lot of put buyers in VIX, the call buyers did not come out with this vol rally.
That is kind of fascinating because you're right. In any other year, not 2020, where we haven't been subjected to wave after wave of volatility and then the erosion of said volatility over and over again since January. You're right. If this has happened in the middle, let's say, I don't know, late 2018 or 2019 even, or God forbid 2017, it would have blown the doors off. There was no vol in 2017. It would have been just a vol-mageddon. It would have been calls all over the place. You're right. These days, it's kind of like, another opportunity to fade. Let's get in there as fast as we possibly can. When we get to some of the breakdowns, the paper in a little bit on these products, I think you'll see all of that going on as well out there. Let's get some of the products as well. Obviously, the futures in Spike's land still halted. We had a good chat about that with Tom. He thought we're in the fourth quarter, he said, when it comes to Spike's futures coming back sometime this year, which is a good thing for a lot of our listeners out there who want to have an underlying to trade the options on. It's been a week or two since I chatted with Tom Gallagher, not this Tom. Any updates, other Tom over there in the realm of Spike's futures, sir?
No, I think you covered it there. It's there's still conversations between the regulators and the exchange, and I just have to hopefully we'll get these things up and running as soon as possible.
Yeah, that's the plan. I was encouraged by his optimism, so the fact that he thinks it's coming definitely by the end of this year is a good sign. Speaking of futures coming into showtime, we saw, I think you could say, a little bit of backwardation. Just a wee bit out there in the VIX futures. The cash is on its own planet in relation to the futures these days, but the front portion of the VIX futures term structure also pretty juicy. Coming into showtime, we saw that no future at roughly 5 points below where the cash is. That tells you how crazy it is right now. That's about a 6-point swing from this time last week. The lion's share of that obviously coming in the madness that is the cash. So read into that with a little bit of grain of salt. The D's future, again, we were talking about how these things had pretty much eroded all of their premium just about a week ago. And now here we are coming into this week, and the D's future is almost 6 points below the cash, 5.5 points or so. That's about a 6-point swing in the other direction from this time last week. And the Jan future, that was pretty much even with the cash as of this time last week. Now it's about 7.5 points below the cash. That's about an 8-point swing since this time last week. So a lot cooking, a lot popping off, particularly in that front portion of that VIX futures term structure. And like we said, the cash is just kind of doing its own thing these days. Mr. Meatball, what's lighting up your tape out there in this, shall we say, juicily backward VIX futures term structure, sir?
Yeah, that's just it. It's super backward. And yet there's not really a lot of hedging drive. And I think that's the weird part. There's not been this giant spike in volatility or spike in volume across any of the volatility products, ETPs, futures, you name it. People are just kind of like, yeah. Any of the hedging I'm seeing is being done directly in the indexes and not using volatility. And I think that, again, goes back to the fact that, we're going from, 30 to 38. We're not going from 15 to 38. And that's part of the reason why the price action has been the way it is. Vol hedging is not dead, but vol hedging is a lot less useful when we've been above 25 for 10 months. If you were long VIX calls or VXX calls or VXX, you got a little help, but we're down. How many points are we down this week, Mark? 150 in the S&P, something like that.
Something like that.
Yeah, I mean, how much is VXX up? Maybe 10%, something along those lines. Maybe 15%. You're not getting the push higher in the futures. That's why, at least for now, a lot that approach to hedging has been abandoned. But on the other end, the panic in SPX options of the volume suck is over. They have picked up their volume. So has SPY, and more. And a lot of concentrated trading right now. I mean, look at the volume in the options that expire today. It is phenomenal. So there is not that same kind of abandonment in indexes. So when you look, it appears that a lot of the vol hedging has kind of flowed into SPX and SPY.
Certainly hard to argue that. You look at the volume numbers. We'll get into those in a second. Brian, I know you've been watching the wildly swinging VIX futures term structure out there as well. What's been catching your eye out there this week, sir?
All right. Yeah, we've been talking about the VIX in general, just with all of our clients and on a lot of my events across YouTube and Twitter and everything. In that, we're looking for more volatility going out in the future, even though the actual historical vol in the SPX, the actual movement of the index has actually been down recently. And normally when we get to all-time highs, very rarely do you see the anticipated implied volatility going forward. But my biggest point here is that they were right. And by looking at it, a lot of times people are saying, oh, we should be selling vol when it gets this high and selling vol when it gets this high. And I've basically been talking a lot about the fact that, like back in March, if you were buying premium, it was a good thing. Buying premium was a winner if you were getting direction right overall. So even though the vol has been extremely high, to see the VIX get the big spike up when we finally get some historical actual movement, some actual movement in the index. Now we see, the VIX and the spikes all back up around 39, but we're still anticipating a lot of volatility just going into the year's end. And that obviously to me is just people hedging more so than speculating. The open interest on out of the money SPX option contracts is really what's driving this. Seeing a lot of people coming on in and buying those puts relative to the calls, just way more volume on the out of the money put side than out of the money call side. And it's just interesting to see whenever you see that VIX just would not get down below 25 or the spikes. We just couldn't get it to push it below that level. And it just shows the crazy world that we're in right now with living with a pandemic as we are.
Crazy world indeed. Let's see what kind of crazy options paper we've got on the tape here. It's interesting. We talked about how the spikes futures are halted and have remained so for some time, and yet there are still, looks like, some retail finding their way into the spikes options. It's always encouraging to me to see 10 lots and 20 lots, even 30 lots going up out there. These folks are finding their way out there, despite the fact that, again, the underlying a little bit hard to come by these days. So interesting stuff. Let's do a quick top 5 out here. Then, Tom, if you have any thoughts on these or just what's going on as spikes options, have at it. Number 5, we got the NOV 50 puts. I love the strikes out here, too. They're very interesting. Remember, we said coming into the top of the show, listeners, the spikes was at about a 39. So these are, shall we say, I think a little bit meaty puts. I think fair to put it mildly out there. Number 4, the NOV 23 calls. Number 3, back to some meaty puts, the D75 puts. Someone likes really meaty puts out there in Spikes land. Number 2, the NOV 47 half puts, also fairly meaty. And the number 1 position out there right now, Feb, going out to Feb, the Feb 11 calls. So meaty calls and meaty puts are the orders of the day out there. Tom, are you surprised that Spikes managed to have some resilience despite the fact that the future is still in limbo right now, sir?
Yeah, I mean, like you said, it looks like these might be some retail type trades, but I mean, they're small, but they are strange strikes because they're deep in the money. So, I'm not sure if someone's trying to do this as a replication for the future or what, because they're very high delta options for the most part. It's but I think if people are trading outright and they're not, they don't need to hedge with the future. It's the market making community and the liquidity providers that need that hedge. Whereas if you're just looking to take a directional view or some kind of a vol view, you can just trade the options. So I don't, but it is a little strange that they're in the money options.
I think that Mark, what you've got is you've convinced. Ever since the word meefy came into being,
you love that
with meaty and beefy options, retail traders have been all over these deep in the money calls.
These are definitely meefy options that they're trading. These
are super meefy.
Who needs a future when you could just create it yourself using the options? It seems like someone is up to exactly that out there in Spikes land. We're going to get to those aforementioned meefy options out there in UVXY, or perhaps not so much, in a little bit later on in the show. First, let's break down what's been a pretty rock'em sock'em robots week for VIX options. Coming into this segment, we see actually a surprisingly light amount of paper out there in VIX land, but again, we have seen a few shocks to the system this week, so by the end of the week, the fifth time, maybe not so much. 368,000 contracts on the tape as of a few minutes ago. The most active contracts out there today, almost 35,000 of the DEES 23 puts. Lighting up the tape today, about 31,000 of the NOV 25 puts, about 20,500 of the DEES 50 calls, getting back to those meaty strikes out there, or maybe optimistic strikes is a better characterization of them. And then we got Jan 19 puts, 19,000, and round out the top five out there in VIX land today. We've got the NOV 45 calls. Actually, particularly on the tops, before I get to that, let's break down the top positions out there in VIX land today. We were talking, Mark, you were just saying about how you didn't see the call players come in this week like you might expect. Well, that is certainly reflected in our top 10 size positions in VIX land right now. There is only one call in the entirety of the top 10 out there right now. I can't remember the last time we saw that. Usually there's at least 2 or 3 somewhere in the top 10, but one call in a product that is predominantly calls all day, all the time. That's probably telling you something about where the market is leaning right now. It costs you about 125,000 contracts to break into the top 10 in VIX land right now. It's getting a little bit more respectable. It's still not quite what it was, but it's getting more respectable. That gets you to the DEES 22 puts. Number 9, 126,000 of the NOV 24 puts. Number 8, 132,000 of the Feb 17 puts. That's the first Feb, and I think the only Feb on our list today. Number 7, 149,000 of the NOV 25 puts. Then we get to the first and only call on our list for number 6, 150,000, pretty much even, of the NOV 65 calls. That's it for the top 10. That's insanity when you're looking at the VIX options. Number 5, 156,000 of the DEES 25 puts. Number 4, $157 of the NOV 21 puts. Number 3, 163,000 of the March 17 puts. Number 2, $163 as well of the DEES 20 puts. And number 1, with a little bit larger bullet out there these days, but still nowhere near what it usually is, 201,000 of the December 23 puts. Total of about exactly 7 million open out there right now. And get this, about 3.75 million open on the puts and about 3.25 million on the calls. So, Mark, does that just reinforce what we were just talking about? In the top 10, there's only one call, and in the entirety of the open interest in VIX land right now, puts are actually beating calls right now, sir.
That I am flabbergasted. I don't know that I've ever seen this. Have we ever seen this before? One of the top 10 strike. It used to be the other way around, right?
It's always the other way around, yeah.
Maybe one put, maybe 2 if things are one call. And these are big put positions, right? These are a couple 100,000, 200,000 open puts. I mean, there is what we're seeing is, like I said, the put players are staying in and the call buyers are all gone. And that makes me wonder, what does, I've got to really think about how this is going to affect, what happened, if we do get a leg higher or a leg lower, right? How does all of that put open interest affect, what's going on? I mean, could we get a true VIX crash if we fall hard enough and the market makers have to basically short a bunch of futures down lower? Could you see a giant vol move lower, a la, something along the lines of what took place with oil, not going negative, but a true tank job on some of the long vol products? And you got to ask yourself if the answer is yes. That is absolutely nuts, and something that I have to do some serious thinking about, because we've never seen this type of paper flow before. Is that hedging going on someplace else, or because like I said, we are seeing put buying in SPX, or is this just a ton of put buyers? I got to wrap my head around this a little bit, because that is just nothing we've ever seen.
Maybe if you go back to like one of the weird, aberrant, quiet non-months of, let's say, 2017, when nothing was really trading and there was a couple 100,000 maybe different in each direction. Maybe that's the last time we saw puts outpacing calls or something weird like this popping up. But in a hot and heavy active time with only one call on the top 10, I'm hard-pressed to recall another time when we've seen that in recent history. I'll have to reach out to the once and future Dr. Vix over. He's the keeper of all my Vix historical data. See if he can come up with another time. But this is certainly, if not unprecedented, at the very least, a highly, highly aberrant scenario out there right now. Let's break down a couple other days here really quickly, because obviously it was a pretty active week out there in VIX options. Yesterday, 672,000 contracts on the tape. The big contracts were 53,000 of the D's 23 puts, and there were some calls lighting it up yesterday. We saw about 38, almost 39,000 of the NOV 45 calls trade, 27,000 of the NOV 42 half calls, and 26,000 of the NOV 35s, followed by about 23,000 of the Jan 21 puts. Wednesday was the big dog. Yeah, 758,000 contracts on the tape on Wednesday. The big prints. Now, this was all puts all the time on Wednesday. 48, almost 49,000 of the D's 25 puts, 35,000 of the NOV 21 puts, 35,000 as well of the NOV 23 puts, 33,000 of the NOV 25 puts, and 27,000 of the NOV 27 puts. So nobody had any time for calls on Wednesday. Tuesday, let's see, 417,000. So all respectable days out there this week from a volume perspective. The number one print, yet again, most active contract, 40,600 of the D's 23 puts. You're starting to see a bit of a pattern here. Listeners, followed by 21,000 of the NOV 28 puts, almost 21,000 of the D's 18 puts, and then 17K of the D's 30 calls, and 12,000 of the NOV 30s. Monday, also a very active day, the number 2 day on the week. Of course, today's not done yet. We'll see. 720,000 on the tape there for Monday, with about, let's say all puts all the time out there. Let's see, number one was the D's 25 put with 50,000 contracts going up on Monday, followed by number 2, the D's 23 put, 45, almost 46,000. Number 3, 44,000 of the NOV 27 put. Number 4, 38,000 of the NOV 25 put, and round out the top 5 on Monday, the NOV 24 put with about 33,000 contracts on the tape. Just a ton of paper out there, and like we said at the top here, just pretty much all puts all the time. This is interesting time. Now, if you believe this paper, it looks like it's setting up for an enormous vol crush. But then again, as the Rock Lobster alluded to on the Option Block show yesterday, can it really be that easy if the whole market is leaning one way? Does that maybe have to give you a little bit of pause to say maybe we need to fade this out here? Either way, I'm always a little bit leery when everyone's on one side of the trade, and it does seem like everyone and their mother is definitely on one side of VIX right now. How will that work out? We shall see. Meanwhile, let's go out to the product you guys all love to fade all day long. Maybe not so much this week, though. Taking a little break on the fade, but as we talked to at the top of the show, also not a huge up move for this one. Actually getting a little bit back right now. It was at about a 26 coming into showtime. Now it's at about 26.5. That puts it up a little over 4 points from this time last show. Again, if you had heard what we said at the top of the show, if you had heard about how much of a sell-off we saw in VIX, how many points were down in the S&P, or how much of a rally in VIX, I should say, how much of a sell-off in S&P over the course of the week, you probably would expect a little bit more juice out there in VXX. You had about 4 handles is all we're good for here on the week, at least right now. So interesting move, but not exactly an explosion, really, of much prominence. It got a little bit higher than that intra-week, but it gave up much of that very quickly out there. Again, coming into, as of a few minutes ago, we saw a little bit north of 122,000 out there. Let's see, looks like they added a little bit more now. It's 162,000 as of a few minutes ago right now. With the number one contract out there in VXX land today are the OCK 26 puts, about 9,600 going up on the tape. Let's do a quick top 10 rundown. We don't have time. Let's do a top 5 because you have other stuff to get to today. We don't have time for Where's Caldo out there. But spoiler alert, there's only 2 calls in the top 10 out there this week in VXX land. So that should also tell you what folks are up to out there. Number 5, we got the Jan 18 puts, 27,000 of those. Number 4, 27,000 as well of the OCK 20 puts. Number 3, 30, almost 31,000 of the NOV 30 calls. Number 2, 31K of the NOV 17 puts. And number 1 with the bullet, 67,000 of the Jan 15 puts. Mr. Meatball, I know your crazies out there love themselves some VXX. Maybe they didn't get what they were hoping for from a pop this week in VXX, but also if they're fading it, maybe they were happy they didn't get that much of a pop. What was your take on the, I guess, somewhat weak move we saw in VXX this week, sir?
I mean, we on Wednesday, we basically advised long VXX in the morning and out of it in the afternoon, and that was exactly the way things played out. Even as we settled on the lows down, 120 on Wednesday, VXX was nowhere near any of the highs, and any opportunity they get to fade these moves. So, the way VXX has moved is buy it in the morning and sell it in the afternoon, because if you hold it overnight, they're going to absolutely tank it. And that is kind of what's happened. So I don't exactly know what I would do with it. I don't think that, I don't think that holding a bunch of calls for next week is gonna have a good payout. I think that you'd want to be out of it by kind of Tuesday midday. My guys are all over this. Like I said, we did put it out to our Vol Edge clients. It popped up in Little John. Calls popped up in Little John, and then calls popped up in our Sharp Bets as well. So across the board, we saw retail buying VXX and buying VXX calls. But then by the end of the day on Wednesday, it had turned entirely the other way into a huge fade. So kind of the exact same setup in VXX that you're seeing in VIX, right? Maybe some short-term call love. As soon as they get an opportunity, it is good night, double X. And thus, yeah, like you said, we're up $4. So, 15% over the last 3 days, the S&P has lost 150 points. That's 5%, almost 5% in 3 days. And VXX is up $3. La-di-da. La-di-da.
Yeah, not a lot of love on the call upside. Did get to a high of about 27 3/4 very briefly earlier this week on Wednesday, listeners, and it kind of gave that up pretty quickly. It was trading a couple bucks shy of that, not too long. And, of course, obviously we're kind of splitting the uprights there between 25 and change and 27 and change right now. Let's go really quickly just because we had such a big discussion on it recently on the show, and we had the UVXY whale joining us on the show, kind of lamenting what's been going on out there in UVXY. Coming into showtime, UVXY was a little bit north of 21, about 21.15. It has ticked up a little bit since the show started. It's up to about 21.60. Puts it up a little over 4 handles, about 4 1/4 handles or so from this time last week. ADV also ticking up. It's up to about 141,000 up there, so it's up about 14,000 from last week. So a little bit more paper flocking into UVXY. But remember, we had the folks from Hercules Investments on the show a couple of weeks ago. They were the ones who were dominating all of that 10 strike out there in UVXY. We were kind of speculating who's doing this. Well, we had them on the show to ask them about that directly. And if you recall, on the show, he was not exactly overjoyed, shall we say, with the performance of UVXY. And he had threatened to close it the subsequent Monday. He kept it on for another week, but is he still open out there? Well, let's look at the top positions in UVXY to find out. And as you recall, last week, listeners, the number one position out there in UVXY was about 40,000 of the DEES 10 calls. He also had about 18,000 of the NOV 10 calls and about 12,000 of the JAN 10 calls. And fast forward to this week, the only thing on the 10 strike this week are about 12,000 of the JAN 10 puts. So looks like our friend got the heck out of Dodge out there. The number one position out there right now are the JAN 12 puts, which was pretty much the number 2 position last week. So sounds like the folks over there in Hercules had had enough of UVXY, at least for the time being. Will they get back in? I think they were threatening to switch their premium and their trading over there to VolQ, which is kind of interesting. They want to go NASDAQ now as opposed to UVXY, which is kind of interesting. So we'll hear more about that, I'm sure, in the coming weeks. But looks like they got the heck out of Dodge when it came to UVXY. You know what didn't get the heck out of our way, though, was just earnings vol. It was kind of all earnings all the time this week, listeners, outside of everything macro going on out there. Let's see who we had. Just a quick rundown of the names we profiled. Remember, you can get the earnings move results, and earnings season reports courtesy of our friends over there at ORATS. You know how to get them. It's all free. TheOptionsInsider.com is the place to go. Monday was Hasbro. Tuesday, 3M, Caterpillar, Lilly, Merck, Microsoft, AMD, JetBlue. Wednesday, UPS, Boeing, our friends across the street there, GE, Six Flags, Pinterest, Etsy, Gilead. Thursday, the big dog, Apple, Amazon, Google, and Facebook. Pretty much most of the FANG right there. And you got Starbucks, you had Nokia, Twitter, another one, WWE, kind of lost in the rift there. Overstock, Blizzard, Activision on the gaming front today. We had Exxon Mobil, I do believe SEBO was before the bell today as well. So a lot of names popping off over there. I know, Brian, you guys watch a lot of earnings vol. You say that's a big driver for a lot of your clients. Obviously, Apple, Amazon, that's going to really dominate a lot of people's attention out there this week. But what were your clients out there in Ally? What were they paying attention to, and what were they trading out there as a result of all this earnings volatility this week, sir?
Well, the FANG stocks were driving everything, and that volatility, if we have volatility in that underlying, that is going to drive volumes at our firm. But there's one thing that I'd like to kind of point out, and actually, Mark, you and I were talking about this before we taped Options Playbook Radio this week. We were talking about the fact that Ford was announcing earnings. And I'm going to bring up Ford because I saw something that was just very odd. And once again, in these times, I don't know if this is odd or just normal because I'm kind of confused about what normal is. But I saw Ford announce earnings on the big down day, and you and I were kind of joking that poor Ford, they finally announce good earnings, and it just gets overwhelmed by the fact that the market is tanking. So I just feel kind of bad for Ford because, they're a good company. They went out, they made some respirators for us, tried to help the country out and things like that. But the stock is still trading, right around $8 or just south of it today. But I saw the volatility before earnings and after earnings basically just stayed the same. And that's just what's so odd to me. And if I just look at the volatility chart inside the Ally Invest trading platform, vol in Ford on a 30-day weighted basis just spiked up a few percentage points and came down even less than that. So we see the vol in Ford, and I just picked that one in particular because I was looking about it and we were mentioning it, but just volatility just not coming off. So what I see a lot of our retail clients do, and what we've been talking about, what's an interesting trade nowadays is looking at long calendar spreads. We're going into earnings. Earnings season is not done. I like to look at diagonals and long calendars where if you like that back month, or if you like that underlying, if you want to be bullish per se, going into earnings, well, one thing to kind of think about is maybe buying that month that contains the earnings and selling some of this vol premium in the front month. Overall, just because it's just staying in these option contracts, it's not collapsing, even on simple retail stocks that aren't known for volatility overall. So I guess those were a couple things that I've seen.
Brian, kind of an interesting point. So, our Little John trader that kind of goes after and analyzes retail flow, what we're finding is with a lot of these free option traders, these, smaller account traders that trade options love $8 stocks that have inexpensive options. So they're all over Ford and General Electric, two of the most boring stocks on the planet. Look at the volume on the 7.5 and the 8 strikes expiring today. It is all retail flow flowing into these inexpensive stocks. And you're right, it absolutely pumps up those near-dated options, allowing you to put on, and I love your idea, an inexpensive calendar, an inexpensive bull calendar on something like Ford or General Electric. I think your calendar idea is gold. It's gold, Brian, gold.
That's all right. The price of gold is collapsing, so that's what shows you about what my idea is probably worth. But overall, that's just one of the things that I've seen, and I've seen a lot of our retail clients come on in and do exactly what Mr. Rock Lobster is talking about, selling that near-term premium because it's enticing. Why wouldn't I sell it? The big event is earnings. It's not prior to earnings, and those vols are staying inflated. Now, that was the first time I've really seen a company announce earnings, like especially a company like you say, Ford is supposedly boring, right, relative to Tesla and some of the other people in that space overall. I don't even know if I can use those two companies in one sentence. I don't know if that's fair overall. But with that said, very surprising that I looked at this underlying. I was talking with some people about buying out of the money options. I'm like, you really should be worried about the volatility crunch overall, buying a little bit out of the money option contracts at Ford, which kind of spiked it. And Ford announced earnings and basically was flat, if you will. It didn't really move much overall by the end of the day. And those options were still at the same price. Like, we did not really see a crunch in those, a few, I'd say a half half a point to a point out of the money, they kept their premium overall. It was just very odd to me. So that's my little 2 cents on what's going on in this world, in this pandemic world that we're living in.
All right. If you want to see more about all the earnings move results, earnings season reports, you know where to go. TheOptionsInsider.com. Got it all there for Tesla, Apple, Amazon, Facebook, Google, you name it. Ford is in there as well if you want to parse that, and a whole bunch more, dozens, if not hundreds of tickers at your disposal. As we head on into your segment, let's see if we can squeeze in some really quick questions. It is time to check the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the OptionsInsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. I like it sometimes when we obviously get deluged with a lot of our listener questions, but sometimes our co-hosts, our guests, come armed with their own questions. Brian's got a pretty active community over there in Ally Invest these days, and he had an interesting question he wanted to pass along from Jennifer Rodriguez. She said, "Hello, Mr. Brian. The questions I had were these." I'm assuming she's talking here, Brian, about straddles or about implied volatility in an option. She says, "Is this the same as the IM or the implied move of the options price? Is that the same as the EM, aka the expected move in the options price? And what is the difference between the expected move and the OSD?" She's acronym soup here, acronym on the brain. Big thanks, though, with all caps. So she's very happy camper. You know, we could have held on to this for the next huddle of Options Playbook Radio. But, of course, let's get people answered now. We like to answer them faster. So what do you have to say here for your client here, Mrs. Rodriguez, Brian?
So this actually is a great question overall, and probably should be asked more often, because I think one standard deviation move, OSDM, is often confused with expected move, and they're not the same. The one standard deviation move is representative on a normal distribution, not to get too fancy here, to represent about 68% of the time what the movement would be by that expiration date. The expected move is also based off of the expiration date. And in this day and age, now that we have weekly option contracts, a lot of times people will quote that expected move specifically around earnings announcements and treat it a little bit more like the over-under on a line in a football game. I hate to make gambling analogies, but this one really applies overall, because the expected move is what the price of the long straddle, or you could even say short straddle if you do the midpoint just in general, is before an earnings announcement. And it's always going to be less than the one standard deviation move, because you're talking about a situation where it's more, I think the numbers, and gosh, this is from, I didn't expect to answer this question, right, but from Sheldon Natenberg's book, I think he's saying about the expected move should be about 80% of what the one standard deviation move will be. Don't quote me on that. I'd have to go back and research it, but I think that's what the number is.
That's correct. Yeah.
Oh, okay.
The straddle price is typically 80% of a standard deviation.
Okay, so I am correct on that, and
you are correct, Brian. As per usual, Brian Overby, dead on.
All right, my head's getting bigger over here. Just stop. Quit it. You're making me blush.
This is becoming a disturbing love fest here.
All right, so with this said, if I'm looking at that, what the expected move really is looking at is more like a line in the sand, like an over-under. If I'm buying that straddle, I think it's going to go over. If I'm selling that straddle, I think it's going to go under. So why do we look at the expected move when we're picking strategies, and in particular what the the seminar that Jennifer attended, I was just talking about long straddles in general. That was the theme, and how you would use that to maybe look at selling a short spread. Do I want to be outside of the expected move? If I am actually doing a long spread, an out-of-the-money long spread, I want to make sure that I'm within that expected move, because I want to make sure that the marketplace thinks it can get to my short strike if I'm actually doing a debit spread in a particular month. So a lot of people focus on that, and it's good to know that the expected move is not the one standard deviation move. It's less than that, and it's more based off of the fact that the reason why I think it's 80% relative to a different number is that you got to also account for the fact that the markets can go up to infinity on the call side and down to zero on the put side. So if you are correct, you have more room for upside than loss on the downside. So let's just call it this. I got a little bit too geeky on you there. Overall, if I'm looking at the expected move, that's what the marketplace is implying the potential move could be after this big announcement, and you want to use it accordingly when you're picking strikes, no matter what strategy you're looking at, especially around known news events overall. But great question. I'm really glad that Jennifer actually picked up on that, because that doesn't always get defined. I think there's some minutia there where a lot of people think it's the exact same thing.
Speaking of minutia, it is that time of the show to dig into minutia and see what the heck we can pick out for the coming week. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, you know what time it is. Time to open up the old crystal ball and peer into the future. Spoiler alert, our crystal balls were a little cloudy last week. None of us had a 30 handle, let alone a pushing 40 handle on here. Let's see, our highest was me, actually. I was at 27 double. I had liked that level. It worked out almost exactly a bullseye the week before. I was feeling a kind of a similar level, maybe a little bit of fade, and then eventually enough juice coming back in to keep us around those levels. What we saw was actually a lot of juice coming exploding in, and as a result, so here we are coming to the end of the show. Spikes at about a 39.60, VIX cash right around a 39 even or so. So yeah, no winners. Andrew, the Rock Lobster, was at about a 27. He was actually 26.99. And Pat Hennessy actually who was our VIX contrarian indicator. Whenever he's on, the thing melts down. He was at a 26.5. So we had a interestingly tight market last week and blew the doors out all of them. None of them even closed. That means our guest this week, let's go with Brian first. We'll give him the dubious honor of going first, and then Tom can follow up. And then Mr. Meatball, because none of you were on the show last week, so you don't have to get lumped into all these loser projections. And then, of course, I will go last because my prognostication, no bueno this week. Brian, we'll start with you, sir. What are you feeling for VIX and/or spikes this time next week?
And/or. Okay, well, they're both at about the same range, so let's pick one number. I don't know. The 40 line on the VIX is really hard to get above, and that's kind of right where we're sitting at right now. I'd like to go above. I'd like to say I think in general there could be more volatility, just the way the marketplace is reacting. We have the big known news event. I'm talking too much. Okay, 35.
35. That's interesting because, obviously all the paper we're talking about is showing an aggressive vol crush. You're saying a bit of a crush, but still some juice, some unknowns lurking out there. Tom, same question for you, sir. What are you feeling for this time in VIX and/or spikes, sir?
I was saying that, I'll choose spikes to go off of as a benchmark, but this is a really tricky week with the elections and who knows. But I think we get some air out of the tires here, and I'm gonna go sub 30 with a 29.99. 29.99 on the spikes.
Interesting.
Forever the optimist.
29.99. So Brian at a 35, 29.99. I've already written mine into the document, so I will read it off later. And Mr. Meatball, you get to go next, sir. What are you feeling?
I'm a one-upper. I don't know if you knew this.
Okay.
I'm a huge one-upper. 20 5.25, 25 and a quarter.
25 and a quarter. All right, and just to avoid any allegations that I was waiting to go last and scum anybody, I actually wrote mine in a few minutes ago there. I came in at shy of where we are now, obviously, getting some of that juice off because it's kind of hard with this crazy, massive, as it has been termed, earnings event for the market to go away, and certainly with all the paper fading it. It's hard to argue we're going to be higher, but then again, sometimes I like to be contrarian, but not this time. I'm going to say 28.65. So we have a market that's kind of all over the place, listeners. Brian's on the upside this time for a change as opposed to me at a 35. You know, we could see some surprises coming out of Tuesday night, and that number could make a heck of a lot of sense this time next week. We got Tom kind of cut in the middle there, 29.99. Then you got me at a 28.65, and then you got the meatball bringing up the bottom as he is wont to do at a 25.25. All right, everybody. Unfortunately, that music means it is time once again for the close, the end of our journey here on Volatility Views. But before we go back around the horn, check in with all my cohorts, see what they have cooking that may interest you. Let's start with you, Tom. If folks are intrigued by all things spikes, they want to learn more, maybe they want to kick the tires on some spikes options, maybe they want to do some meaty spikes options like people are clearly up to right now. Where should they go? What should they do, Tom?
They should go to the website, MIAXoptions.com/spikes, and you'll find all the information there.
There you go, MIAXoptions/spikes, MIAXoptions.com/spikes. Of course, the place to go. You get that cool video, what the heck is spikes? You get all the data, so you can see the quotes, what's going on out there in spikes. The press releases, all you are asking when the futures are coming back, you'll see it there first, as well as a link to a cool show called Volatility Views. I ask you, what more could you possibly want from a volatility-oriented destination? And Mr. Overby, if folks are intrigued, maybe they want to kick the tires over there at Ally, where should they go? What should they do, sir?
Well, I think I'd like to highlight just my podcast on Options Insider, Options Playbook Radio. We called it Fun with Fangs yesterday. We looked at a trade where we were bullish on Apple on a ratio volatility spread and bearish on Facebook on a ratio volatility spread. I'm just going to let you say it turned out to be very interesting after the earnings announcements this week. So you could see that. That was posted on, I think it actually might have posted late Wednesday, or was it early Thursday? But Options Playbook Radio. And then I'm going to come on back, and I'll be here Tuesday. I'm going to be on your election show with you, Mark. And then, as always, I've been tweeting a lot more about our educational events. If you want to keep up with them, please follow me on Twitter. My handle is @BrianOverby. And I guess we'll see you Tuesday overall.
There you go. Yeah, so check it out if you haven't done so already. Options Playbook Radio. I know a lot of you are mainlining that show. An interesting one these days, the Fun with Fangs, certainly a timely one out there. And last but certainly not least, Mr. Meatball, you teased your old friend Little John. I'm still waiting for Friar Tuck, but if folks are intrigued, they want to learn more, where should they go? What should they do?
Yeah, so you've got an account at Ally, and you want to take advantage of the Robinhood phenomenon, be able to trade off of these silly $8 options and know, hey, where should I go with and what should I do? Then come out to Option Pit and go get your Little John. Go to optionpit.com and check out our blog. I put out VIX content on a semi-daily basis, and there's all kinds of awesome stuff. But yeah, we're doing starting November 1st, we're doing a 90-day challenge. I have put $5,000 in an account, and I am going to double it in 90 days. So if you want to join
Nice.
Little John, that is going to be the plan.
There you go. Check out his challenge over there in Option Pit Land. Maybe if you two are like me, you prefer Friar Tuck, hit him up. Say you want to see the version 2 that is more Friar Tuck oriented. Either way, optionpit.com is the place to go. And on behalf of myself and Tom and Brian and the greasiest of meatballs, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. We'll get to more of them soon, don't you worry. Be sure, if you're interested in all things election volatility, join us this Tuesday for the big Election Night Live special. It'll be live via the Mixer link where you guys usually get it. We'll see if we can put it out on some other platforms for you guys as well. Make it readily available for all of you out there who want to join us. No politics, no this candidate is great, this candidate is terrible. Just a whole bunch of great analysis about what's going on in the markets out there. So we'll see you there on Tuesday, and then back again next Friday to break it all down on another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.